So today is a very non-technical call. It's about talking about entrepreneurship and what I learned about entrepreneurship from Y-Combinator. So a lot of you know, we are part of YC. We are Y-Combinator Winter 2022. And I actually applied to YC twice. The first time I applied, we did not get it. And the process was we submit our application. The application took about a couple hours. I only spent 2 hours on it. You have to make a video of yourself that lasts no more than 1 minute. So needs to be less than a minute. It will be the unlisted video on YouTube and you send it in. That's your application. Then you will get an interview if you get into the next round. The interview takes about 10, 15 minutes. And so the first time I applied, we got on a call. That was back in July of 2021. I was still at Lyft, and I've been working at the company for about a year at that point, a year and 3 months. And I wanted to build this marketplace for real estate investing. And the idea was to build these profiles so that investors can go on there and invest. And they said, well, this marketplace thing is really hard to build. And we don't believe that having profiles is enough of an incentive for LPs to connect with the GPs. So I got rejected. 2 months later, I reapplied, and this time pretty much the same application, but I changed the name to Catch a Portal. And it was more of a pitching thing. So I said, well, instead of doing a marketplace, we are going to do B2B SaaS. And the B2B SaaS is we're selling this basic system of record, investment management software or investor portal for the private equity firms in real estate. And I have some experience. I raised about $25 million up to that point. I have more than 1,000 units at that point as a lead sponsor. So it's combining my syndication background and my investing and my engineering background. And I got the interview, and the interview was 10 minutes. Ironically, on that interview, I was in New York City, and I set the time to be, I basically set the time to be Pacific time, but I set it incorrectly when I was in New York. So I completely missed the call. It was very stupid. I missed the call. The most important interview, I missed the call. So they're like, okay, I said, I'm so sorry, I missed the call. I don't know what happened. Can I please schedule another call, sometime today or tomorrow? They said, oh, we have another slot at 5 p.m. So if you want to take that call. 5 p.m. Eastern time, I needed to fly from New York to Vegas to recruit a friend that was in a poker tournament that night. So I took that call, the Y-Combinator admissions call from the Centurion launch at the JFK airport. It was because I was gonna quit my job and start this whole thing. So I didn't care. I was like, I'm gonna do the call anyway. If I don't get in, it's the second time. Usually people say 3 times is a charm. This is only my second time. So I did the call. It only took about 10 minutes. It was 2 of the 4 people were the same interviewers from the last batch. And they started off by telling me about your business. So I gave a 2-sentence description of the business. And then after that, they asked a bunch of very deep questions. So they went straight into the heart of the problem. And then at the end, I think one of the tricky questions they asked, like, because they want to make you feel like you couldn't answer some of the questions, right? One of the tricky questions was, well, if you scale into an enterprise level, how do you plan to differentiate your pricing between the emerging private equity firms and the experienced super enterprise? And I said, well, Zoom has a consumer model catering toward the lower end, but Zoom at the enterprise level just charges by minutes. And so at the top end, we're also gonna charge based on volume, which is how much money they have raised. So that question, I never really thought about it because I was trying to focus on the next step. But the fact that I can think on my spot allows me to get in on the fly. So the way YC works is that they will give you a call if you get in. They will send you an email if you get rejected. So when I was on the flight, the YC partner sent me a text message. Perry, when you land, can you call me? I was like, okay, I'll definitely call you. So when I landed, I pick up the phone. I had a very pleasant 15, 20-minute conversation with the YC partner. They said, congratulations, you just got into YC and you can decide, these are the terms, 7% of your company and $125,000 of infusion of capital into your company. And I was like, okay, I'll think about it over the weekend. And so I talked to a bunch of people and we decided to join by that Monday. So that was the story. All right, cool. I know folks are listening, happy to make this interactive. So David or Terrence or anyone that has any comments or questions on that, this is not a technical mastermind at all. This is just sharing that story. And what I will go on to next is kind of the YC journey, YC statistics, as well as kind of like how being a business has parallels to the real estate investing world of being a private equity firm that's trying to raise money. Because as a startup, we did the same thing. Yeah. Any
Oh,
comment, David?
yeah, I have a question. This is Terrence.
Yeah. Hi, Terrence.
That after they gave you the offer, said here are the terms, and you said,
Yeah.
you would take time to think on it. You mentioned speaking to a lot of people and then coming back to decide to move forward. What was some of the feedback or input you received that gave you, the confidence that it was the right decision to actually accept based on the conversations you had with people once you received the terms?
Yeah. Great question. So getting into YC is, according to some folks, the equivalent of getting into Harvard for startups. And we believe that, and we know that's like very prestigious. We're very happy about it. I didn't really care about the 7% because I'm a solo founder. So I don't really care about like equity, like because I'm not splitting it with anyone. We have equity to employees. So the dilution is not a problem for me. I checked out Reddit and the Airbnb founder, which is probably the most successful YC company ever. There was a question was YC worth it? And the Brian Chesky, the founder of Airbnb, is like, without without YC, Airbnb would not have exist. And so that's that. So the advice I talked to about like 4 or 5 people over that weekend. The advice was, am I ready to go on a journey that is irreversible? That was the moment of truth, because I could go on this kind of lifestyle business, kind of not working that hard, chilling. But when I take YC money or venture money, it's an irreversible path. There are two-door decisions and there are one-door decisions. This is a one-door decision. When you go down that path, it's really hard to revert. And so, and then, and like, am I ready for the major league? Basically, that was the question. Like, am I ready to be iron hard and a grill really hard for the next 10, 20 years? And so I was like, okay, well, I'm ready. Since I'm quitting my cushy job, let's might as well swing for the fences. And so that was basically a mindset shift. It's like, this is serious now if I sign up. Yeah. So, and then, a lot of people say you're going to learn more things. You're going to have a higher vantage point. You're going to learn a lot about the world. And yeah, it might be very difficult, but like, welcome to the NBA. Terrence, does that help? I don't know if that's the answer you're looking for.
Yeah, so that was definitely helpful.
Yeah. Cool. So, all right. So then the YC journey, YC statistics. Let's talk about that. Um, Well, so the way I think about it is 10% of the people want to start a business, maybe 1%, okay? And then 10% of those go anywhere, okay? And then 10% go anywhere. 10% of those apply to YC because they feel like they're ambitious, they're good. And then I believe 1 to 2% of them got into YC, okay? So there's that. Then 10% of those YC companies go on to create hundreds, 100 million plus businesses. Yeah. This is in terms of valuation or exit value. 10% of those go on to create single digit billion-dollar companies. Okay. And then 10% of those go on to create double digit billion companies. And then 10% of those go on to create triple digit billion-dollar companies. Yeah. So this is Stripe Airbnb. This is Gusto. This is maybe DoorDash, and so on. This is maybe Dropbox, and so on, like that. Okay. And so you can do this 1, 2. This is 1 orders of magnitude 2. This is 4, 5, 6, 7, 8. 8. So if 8 is basically 1 out of 100 million, companies or people, end up creating a Stripe or Airbnb. Yeah, so that's the statistics. So I think we are somewhere in this quadrant, like based on our growth trajectory. And to give some kind of anecdote, I was at the Y-Combinator alumni event over the weekend, and YC partner told us that you're definitely in the top 10% in terms of your revenue. And so in a given batch, about 1 to 2% within 3 years, they go on a rocket ship. Like you can see they're already generating tens of millions. They're just like, okay, they're unstoppable at that point. Escape velocity. Then there's like the 10% that's like growing, they're like doing well, like in the millions of revenue, but there's not like they're like a rocket shipping. So they're like a good, slow corn. They're not a unicorn yet, but they're a slow corn. And we're in that bucket. So there's like the tier 2. And then there's like a 10% that's like, what's the best way? They're like not doing that well, but at any given time, they can turn it around and start doing well. And then there's like the 80% that's just like graveyard. Like they're on their path, on their way to like pivoting or like endless pivoting and then starting over. And so it's kind of depressing that this is the power lock. But when you see these really, really talented people, by the way, just 1 to 2% of them got into YC. Every other person I ran into is like graduated from MIT in 3 years. And these people are still not succeeding. And yeah, so it's very humbling, but that's just the game that Y Combinator plays. So so I gloss over some of the statistics. They're not 100%, accurate per se, but it's in the right orders of magnitude. That's what I will say. So in each one of those successions, it gets harder and harder. That's what I will say, right? Because of all these companies that create a very enduring business for them, the founder, only 10%, 10%, 10%, only 1 of 1,000 of them go on to create a life like generational business. And we are not trying to do that. It involves a lot of luck and the timing to create that. But but that's the nature of the YC business. So that's on the statistics. And another thing I will say is I did invest in a bunch of YC companies. I'm actually one of the angel investors on Y Combinator. So I invest like half dozen to 8-ish companies. And I like the founders, and people ask me, why do I invest? Honestly, I say I'm not investing for the money. I invest because I just like the founders. I don't know. I just like what they're doing. And there is almost like a putting your money to say, I kind of want them to succeed. And I know this by throwing this 25K or whatever, it's going into the water for sure, but maybe there's a chance that will succeed. And so that's what a asymptotic power log business looks like. Yeah. So let me pause there again. Any kind of comments there, Gordon or Terrence or David, Chloe? Mm-hmm. So let's talk about, I want to make these calls more like 30 minutes instead of like an hour, because I think I rather make it short so that people get something out of it. So the question is, how did we get it? What about us that we got it? And I've been thinking about that problem, and I translated into the what's the makeup of a private equity firm, investing firm. So first of all, I want to make the statement that real estate syndication and real estate funds and private equity, they're more of a business than about real estate. So private equity real estate firm is more like a business than it is about real estate. Real estate is just the mean, and the firm is a business. Any business comes with a profit and loss statement. Every business needs to have customers. So who are the customers of a real estate syndication, right? Is that the tenants or is that the investors? Who do you think is the investors? Or maybe I know folks are maybe passive listening, but if you think the investors are the customers, maybe you can voice up. And if you think the tenants are the customers, you can also voice up. Who are the customers of a real estate syndication?
I think that the tenants are the customer.
Okay, great. Yeah, tenants. Yeah, great. I think so too. And that's thank you for saying that. Tenants are the customers, real estate is the product, and investors are just investors. A lot of people made the mistake of treating investors as their customers. If you're a co-sponsor or like a fund of funds, then maybe you can say your tenants, your investors are your customers because that's all you do, finding them and so on. And so, but for a real estate syndication where you are the lead sponsor, the tenants are their customers. And so yeah, so from that point of view, we are YC wants to look for someone that's customer centric. So it's important for any business to know who are your customers, what is your product, and so on and so forth. Okay, so what is YC looking for? To answer that question, I want to kind of draw upon how we got into YC as a solo founder, because it's really difficult. How did we get into YC as a solo founder? And the reason that solo founders are really difficult, it's very hard for them to get into YC, is that it requires a coverage of skill set. And what is a coverage of skill set? Meaning that the initial team needs to have these skill sets before they want to fund you, because any missing piece in these skill sets will end up not causing the company to succeed. What is it? The first one is you have to product savvy. You need to create a good product, meaning that in the real estate terms, the property needs to be good. If the property is not well managed, there's no other story. There's no investors, there's no tenants, there's nothing. Just the property needs to be good. And we actually built a good product up to that point. Like it's actually a working product that's getting revenue. Okay, so the product, I am also product savvy because I was a engineering manager at that, and I was very product focused. The second one is technical. For a software as a service startup, they wanted to be technical. And what does that mean for a real estate investing firm? Technical means you know much about capital markets, you know about underwriting, you know about how loans work, you know about how vendors work, you know pro formas, and you know the area, the market. So you basically are in the game. David here is definitely in the game. Like he knows the market, like and David and I knew each other for a long time. And so being technical, like, are you a domain expert? That's both on the technical side, that's both on building the product and also knowing the domain. So there's that. That's the technical part. The next one is design sense. Like, you don't need to know how to design, but you need to have good aesthetics. So that's taste. That's kind of like not bogged down by the short term, like not bogged down. This taste not bogged down by the short term, short term fads, but focus on what works and what's aesthetically pleasing. This is for a software as a service company. Okay, so those are the three. Then the fourth one is there are 6 areas. The fourth one is can you do sales? Can you do sales? It doesn't matter that you have a good product or you're technical. If you're not able to sell, then you just don't have the skill set. You don't have all the roles required for any successful business from the very beginning. You can hire them, but they want to see that you have the components in order to do that. The reason that we got in the second time instead of the first time is that the second time we have revenue. The first time we did not have revenue. And so the fact that we were able to get in was that we had revenue. And revenue means, okay, at least you can sell. At least you know how to get certain customers. At least you can get one customer. So sales. On your end, on the private equity firm side, what does sales mean? Um, sales is how can you create a good leasing team in your by your property management company that you can consistently keep the occupancy high for that market. Because you need this. This is sales and marketing, by the way, sales and marketing. The fifth one is raise money, equity raising. Equity raising. Can you raise money? So equity raising is very much tied to sales. Equity raising is, are you able to paint a good picture? Are you convincing? And do you have a good track record? Does what you do make sense? Like when there are certain folks that go into private equity firm, their experience is they have like 5, 6 units already. They were doing fix and flips. Their spouse works at a nice company. They are well off. They're pretty high net worth, and they are looking into syndications as a way to scale. Or they were a previous entrepreneur. Like that persona can raise money because it makes sense for what they're doing. But if they came from somewhere they never bought a house, they don't really know what real estate is, and they're like, they're not in their 20s, they're in their 30s, and they are just like working at a okay job. Like that persona, unless you are really changing unless you have an angle, like you're doing a lot of content marketing and so on, it's just really hard to trust that persona. Like I don't believe that this real estate thing it's a job meant for you. Um, it's kind of, yeah, that's what I'll say. When we got into creating cash flow portal, it makes sense. Like I'm like almost designed to do this thing because I'm passionate about real estate. I have syndications. I raised money before, so I know the domain. I'm also technical. But if you were asked me to create like a meditation app or like some fitness app, I'm just like, no, like nobody will believe that story. Like I can pitch all I want, but nobody will believe that because they just look at Perry and like, there's no way Perry will design a meditation app. But if Perry were to design an investor portal, okay, that kind of makes sense, even though Perry hasn't shown signs of success. Right. So that's the equity raising. And then the last one is management. So management is like being a good manager. I happen to be lucky in this sense because I was an engineer manager at Lyft. So a typical funding team for a Y-Combinator startup, I realize, is that they want to see you have enough people in your company that can cover all 6 skill sets. And most of the time, one person does the first 3, and then the other person does the next 2. There's a one person for product and technical, and then there's one person for sales and equity raising. Usually the sales and equity person is the CEO, and then the other person is the CTO. And I just got lucky that I happened to actually touch on all of them. The only thing that I don't know how to do was sales, and I had to learn sales. But when they heard that, oh, we already raised like a couple $1 million for the startup without getting into YC, they were pretty impressed. And I said, well, I can raise money because that is the product. The product is about raising money. If I couldn't raise money, why am I even creating this product? And so that's the reason I got in. Solo founders were actually pretty rare in YC. So and so there's that. I will say we definitely had the help of the timing because it was 2021 and everything is going to the north. And so at that time, there were a lot of startups, and YC also accept a lot of startups. And so that I'm very grateful for. Since then, 2021 and 2022, those startups tend not to do very well because that zero interest rate environment, everyone raised at an insane valuation. And then since then, a lot of the business, their revenue drop, their valuation dry up, their funding dry up, etc. So most of the companies are not doing well. But I also think that there's a joke that like if you look at all the wine vintage years, like in French, there are a bunch of wine vintage years, and there are like bad years and there are good years. The 2021 and the 2022, our batches were considered the bad years. We're the bad vintage years because, the companies that came out of those years just like overvalue initially and all that. However, they also got into a lot of trials and errors and tribulations. So I do believe some of the best companies will come out of that batch as well. Okay, so that's that. So the parallels between a business and a syndication are you need to know the product, you need to know your market, and you need to know all the cap rates, performance, and so on. You are technical that you don't mind underwriting, or you have someone on your team that can underwrite, right? You can't just be like, well, if you know all of them, then yeah, you can start a company your own. But if you don't know them, hire someone or partner with someone that is very technical. You need to have a good design sense, like, what a good taste. Don't just optimize for buying the thing that makes the most money. Sometimes a 1960s asset, just like in terms of taste, it's just like this doesn't exactly work. But you can also say when you get really good at it, this is a class C location. But because of my taste, this in terms of trade-off, it works out. Like you have to make it's a taste. It's art, it's no science, it's just like what you believe in. And your investing philosophy is a manifestation of your values, what you care about, right? If you optimize for IRR all the time, then yeah, you're gonna go into all the Class C deals, but then you can also get really good at it. Okay, this is my thesis, and I will avoid some Class C, but pick other Class C properties, and I still could have a very good portfolio. But you need to have a strong sense of taste. Then the next one is being able to sell and raise money. And I feel like if you have ABC and your team has ABC, you naturally can raise more money. That's my belief. And then finally, as the company scales, they need to believe that you can manage the team and be able to hire. And so I want to summarize the reason that YC pick Cashier Portal, if I were to reflect back, was due to that as a solo founder, I have demonstrated that I have all these skill sets, even in the application or in the 10-minute interview. And that's why they picked us. And I also think when I look at our customers, I go on a calls with the customers a lot. I have a pretty good sense if they're gonna be a good capital raiser, or a good like private equity firm or GP or fund manager and the lot in the future is whether they also possess these things. Another positive example, we have a customer that went to MIT for undergrad. They have a fund. They are very technical. They are using our drip campaigns, our CRMs day in and day out. They always have a good design sense because they're posting on LinkedIn. Their website is professional, and like they create a good brand, like just a brand that's like, well, you're legit. Their sales motion is good. They hire someone to do sales. The founder may not be doing all that much sales and email marketing, but they partner with someone or hire someone to do that. And so far, they are successful in terms of equity. And then finally, because they're expanding their team, they must possess good management. So all of those combined, like even though they may have millions of equity raised so far, but I can see that in 5-10 years, they're going to be one of the most successful private equity firms if they decide to continue that track record, and they're still pretty young. And so that will be a successful. So usually I don't bet on the horse that has already won. We bet on the horse that are yet to win. And these are the criteria that I look for in any kind of business, whether that is in a startup or that is in a private equity firm. So that's pretty much it. 33 minutes. Terrence, thank you for turning on your camera. Yeah. What do you
I
think?
appreciate all of this. Are you going to share the recording or?
Yeah, so I will share the recording. I will put them on YouTube, and then you can check out Cashier Portal YouTube channel to get all of this. So we're posting, we're like running a couple weeks behind in terms of YouTube uploads. Yeah.
Okay.
Yeah. So we really, the attendance is not that high, but I think as time goes on, the attendance is gonna be awesome. And then we want to make it more of a mastermind, but it's still a good chance for me to record and upload them so more people can benefit.
Definitely. Well, I appreciate you doing this. I learned a lot, and I will continue to explore cash flow portal and see if it's something that fits for my group. And if I have any other questions prior to next Wednesday's call, I guess I will contact you directly.
Yeah, absolutely. You can absolutely do that. Curious in, a couple of sentences, what is the most interesting takeaway you have?
I would say the breakdown of the team components, just in terms of what they are looking for. I know you didn't necessarily get into weighting each of those, like in terms of importance, but laying out the six different kind of skill sets or attributes, I think that was very interesting to see.
Very cool. I love it. Thank you. Thank you for your time, everyone. And I'll hope to see some of you again next week.